Good day, madam. I'm Sivalakshmi and my group member is Leedya Sivalakshmi. And now I'll start with the article 1. The title of the article is Relational Study between Macroeconomic Variables and Gold Price. The purpose of this article is to find relational study between macroeconomic variables and gold. Gold is one of the international leading commodities which is in demand as jewelry as well as an investment. Despite gold gain as a dependable safe of value, its rate has been as fluctuating as other commodities or belongings, which will include crude oil and stock. Therefore, investors need to be conscious that gold isn't completely proof against market turmoil and economic disaster. The findings display that the hobby price has a substantial negative effect on gold charge, while its inflation fee, crude oil rate, and change rate have an extensive fantastic effect on gold price in leisure. The consequences recommend treasure data and insight to policymakers, researchers, and trades in choice making. And the next one is the problem. The problem which will validate this paper is the uniqueness of gold. Its call for and charge had been extraordinarily high in comparison to other general commodities in recent decades. Investing in gold has been completed with the aid of buyers for a long term. During the early stages of the economic system, the price of gold is not determined by the way of supply and demand, but as an alternative with the aid of its unique characteristics of exclusively. However, on this new era, the cost of gold is intently associated with the economic system everywhere in the international, where the gold rate might also vary or alternate with the aid of day or even by hours. This condition will supply terrible impact to traders. Based on Malaysian evidence, the hypothesis of this journal is to study the correlation and relational impact of gold price and macroeconomic variables. The findings of this study are expected to offer light on the economic factors that influence gold prices, providing useful information to investors, policymakers, and researchers. Moving on to review of the literature. In this article, they used numerous citations. For example, SAN 2012 say that when inflation takes place, gold prices will generally upward thrust. Demonstrates that gold is the proper asset for both funding and inflation protection. Many researches have been done in an effort to determine the factors that have an effect on gold price. Gold is presently an attractive funding alternative in keeping with Sukri 2015. This is a result of the gold's inherent sturdiness, as well as other traits along with homogeneity and fungibility. Malaysians have a tendency closer to purchasing gold as a form of savings because of its conversion to money that is taken into consideration of liquid asset. It's also an image of first private wealth. The next one is design and procedures. The information was gathered from the Malaysian Statistics Department's database as well as the Index Mandi website. The effect of macroeconomic variables is investigated using time series data analysis on the gold price. This study is clearly a replica. A replication study may be considered that's a pre-repetition of a prior distributed think about utilizing effectively comparative strategies and conducted beneath sufficiently comparative circumstances. The correlation between the variables was then investigated using Pearson's correlation analysis. Finally, a multiple linear regression analysis was performed to determine the significance and impact of the macroeconomic variables on the gold price. According to the regression results, the four independent variables chosen are interest rate, inflation rate, crude oil price, and exchange rate are the major macroeconomic variables that influence the gold price. Moving on to data analysis and presentation. Quantitative method was used in this research. Quantitative research is the method of collecting and analyzing numerical information. The hypotheses for this study have been developed based on literature review. There were four significant that were observed with different results. Such theory 1 states that there's a positive noteworthy impact of expansion rate on gold cost. Theory 2 states there's a positive critical impact of rough oil cost on gold price. Theory 3 states there's a negative critical impact of exchange rate on gold cost. Theory 4 states there's a negative critical impact of fascinated rate on gold cost. The last one is the conclusion. The alternative three variables post fantastic results at the gold charge. The effective locating at the inflation is constant with SEN 2012 and Sindhu 13. Lastly, as for recommendation, research is needed to design the efficiency of technical trading strategies, through which includes more advanced and newer technical trading techniques over a longer time period, especially when the use of gold markets as low cost studies method. Thank you, and now Leedya will continue with the article 2.
Thank you, Ms. Shiva. Economic Forces on Gold Price in Malaysia is the title of second studied article. The purpose of this article is to examine the relationship between macroeconomic factors with gold price before, during, and after the financial crisis period in Malaysia. During the occurrence of a financial crisis, investors will take gold as an alternative to investment, as gold is used as an instrument to hedge against inflation. To add, during an uncertain economic condition, investors will flock to gold market as a protection against uncertainty. The factors specifically influencing the gold price are unknown before, during, and after the financial crisis. From this study, exchange rates are found to have a significant relationship with gold price in the three examined periods, and the relationship is defined as an inverse relationship. As for after the financial crisis, inflation rates are found to have a positive significant relationship with gold price, while crude oil prices are found to have a significantly negative relationship with gold price. Moving on to the problem, gold has gotten a lot of attention as a good investment during times of financial hardship because the prices of all kinds of assets vary a lot. Concern about gold have grown in recent years as more people recognize the benefits of using gold as an alternative investment. Due to its unique characteristics, Gold is one of the tools that provide excellent investment returns regardless of a country's financial situation. Gold is regarded as the safest investment in the world by investors. Despite several economic crises, market panic, and financial instability over the decade, gold has been a strategy used by investors to hedge against inflation because gold has a store value at such times. Since 2011, the price of gold has fluctuated freely, and the key reasons that drive the gold price are the interplay of numerous elements at once. The hypothesis of this study is to measure the relationship between macroeconomic factors and gold price, interest rates, exchange rates, inflation rates, and crude oil prices, which have been selected as the independent variables. Moving on to the next slide, which is review of the literature. Just because the study has related to gold price, the researchers have added some reviews where over the past decades, gold has been considered as a safe haven because it has been an imperative asset in the modern capital market, which is mentioned by Wang and Chua 2013, D, Lee, and Zeng in the year of 2013. Ibrahim 2014 discovered that gold price is highly affected by numerous macroeconomic factors in a study focused on identifying the factors that drive the gold price in Malaysia. Shukor 2015 conducted research to determine the macroeconomic factors that influence the gold price volatility. They even discovered that only a few macroeconomic factors had a major impact on gold price volatility in Malaysia. Not only this, there are many more literature review in this article too. Next slide. Well, the next slide is design and procedures. It is stated in the article itself that the data from the study were derived from quantitative secondary data. This study is a replica because the independent variables are recommended by the previous study, which is conducted by Toraman 2011. The dependent variable in this study was gold price, which was impacted by the other variables. However, just 4 independent variables are used to explain the gold price in the article. The independent variables are interest rate, inflation rates, exchange rates, and crude oil. Moving on to the next slide, data analysis. Well, the model used in this research is the multiple regression model, which is least square method. This model was adapted and modified from previous research and used to investigate the simultaneous effect of these specified independent factors on gold price. The model is as the equation showed in this slide, where GP is gold price, IR is interest rates, ER is exchange rates, INF is inflation rates, and CO is crude oil. However, the finding supports the hypothesis and also the purpose of the study. Lastly, moving on to the conclusion. To summarize the findings, the conclusion of the study was successfully in evaluating the elements that influence gold price variations. Only the exchange rate had a substantial association with gold price before and during the financial crisis. Finally, following the crisis, it was discovered that the rate of inflation, the exchange rate, and the price of crude oil all have substantial links with the price of gold. And that's all from us. Thank you.